Hey investors, thank you so much for joining. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Robinhood. So Robinhood just reported their Q4 results last night. Gonna go through that. So I know and I recognize the stock is down 60% in the past 3 months, but even at this point, I continue to say that you shouldn't really consider this investment. So I'm gonna go through and kind of look at this through different angles, but the message is quite clear here. This is like uninvestable. So as I already said in the introduction, the stock sold off after hours, approximately 10%, and in the past 3 months, the stock is down approximately 67%. Okay, then the after hours, you're kind of down 70% in the past 3 months, right? And even at this point, do not kind of look to buy this dip. And don't average down. This investment, there's a lot of problems with it. And, I have no position here, but it's just, there's so much here that it's just, a lot of people lost money and a lot of people reaching out to me and saying, oh, Michael, you don't understand Robinhood and this and that. And I'm like, yeah, perhaps. But, the message was really, really clear. And here, so I've been covering this stock since August. I've been consistently saying, don't invest. And here, the two red arrows, you can see this is for the 3 months that are covered above. I said Robinhood's worse than it looks and why you should avoid it. I've been very, very unwavering saying, don't get involved in this. And it's not that I'm kind of looking like ages and picking out in like hindsight something. Every few months I write about this stock, and every few months I say the same thing, and people always reaching out to me saying that, anyway, it doesn't matter. Right, so kind of let's go through this. So they put out their guidance that Q1 is going to be a negative 35% year over year. Now, last week when I wrote about Robinhood, I said that Robinhood is about to announce their Q4 results next Thursday after hours. Importantly, we're going to get its guidance for Q1. Given that Q1 was so strong last year, most reasonable minds expect that Q1 will be negative year over year. However, the question that remains outstanding is just how negative. So we got our answer, negative 35% year over year. Now, let's keep some context, right? So they're obviously trying to put out some really dismal guidance to allow themselves some wiggle room to kind of, impress the street afterwards. That being said, the trend here is quite undeniable, right? So we're looking at this and it's kind of going from 300% year-over-year growth rates to 100% year-over-year growth rates to 55% year-over-year growth rates, then positive 14%, and then negative. So it's very clear how things are going. Moving on. So here's the thing. So they have if you listen to their calls with attention, they have a lot of compelling aspects, and they talk about democratizing finance for all. They talk about aligning investors with long-term thinking. They're really, really passionate about it, and they're investing very aggressively to make sure that the platform is offering their users high service, reliability, and uptime. That's one of the things that people have mentioned about Robinhood, about the restrictions and the uptime, and there's been a lot of those kind of points of view that people kind of push out. So they're pushing out their own narrative and saying that they're very much aware of this and they're really motivated to kind of improve the platform. That being said, if you follow my work, I've always said don't pay too much attention to the revenue growth rates. Just try to understand what the customer is doing. If the customer is growing or the user is growing towards the platform, that is the best sign you're going to get. On the other side of the equation, if customers are leaving the platform, then it's not a growth stock, then it's not a growth narrative, then it's a value stock. And when it comes to valuing stocks, you only value stocks on two things actually, but predominantly the ones that I look at is one thing, which is free cash flow. You could also say the argument, you can value a stock on assets, but that's a different type of investment and I don't get involved there. So profitability here is the issue, right? So you can see here in the graph, when they were growing at a really rapid rate, they had strong EBITDA margins. So as you looked at this, you say, wow, 25% EBITDA margin, this business is terrific. But as the revenue growth rates are slowing down, the EBITDA margins are turning more and more negative. Now, in the ideal scenario, when it comes to investing, you want a business that's stable with stable margins. Or in the ideal scenario, you want them to be growing and expanding. But, the minimum you're going to request is them to be stable, not rapidly declining and compressing. And that's really not what you want. Now, on a cash flow perspective, once we add back the stock-based compensation that they've given themselves of 1.2 billion, once we add that back as a non-cash expense, they burned through $1 billion in 90 days. That's cool. I think, burning through $1 billion in 90 days, that's pretty significant. That's obviously double what they did last year. So again, as the revenue growth rates are slowing down, they're burning. I mean, during the earnings call, obviously that was one of the critical questions that analysts were pointing at, saying, okay, you have $6 billion in cash on the balance sheet. How much is that? Is actually unrestricted? And Robinhood reassured investors, and they said that we are looking very solid. So yeah, no comments on that part. So the stock is priced at approximately, including the after hours dip, it's priced at approximately 5 times forward sales. Now, truthfully, right, so investors pay a premium for businesses that are growing their revenues pretty rapidly. Not that the revenue growth rates are strongest in the rearview mirror. Stocks with poor visibility don't trade at a premium. So, this has very poor visibility. Robinhood's revenue growth rates are really volatile and prone to negative surprises, such as the quarter we just seen. The guidance for Q1 is pointed towards negative. Even if they come out at negative 20%, I mean, this is it's really a negative surprise. Robinhood is meaningfully unprofitable and burning a substantial amount of cash flows. I have a question that I believe at some point they're going to need to raise some cash. They already said, oh no, we have plenty of lines of credit and everyone is just giving us money, and banks are banks give money to businesses that don't need money. If you need money, banks don't give money. Anyway, I suppose they'll have to do a capital raise. I just can't see how they can get around this. You're not going to burn through this amount of cash, and you'll just go tomorrow if that continues. Anyway, so from my perspective, Robinhood remains uninvestable. Now, I understand that for many readers, the fact that I'm bearish this name frustrates them, okay? And when there are so many truly remarkable businesses in the market right now that are priced, in the last several weeks, so many stocks have gone on sale. There are businesses that are really innovative. There are businesses that are growing really rapidly. There are businesses that are making strong free cash flow. Like, why would anyone be paying this high multiple for a business that offers investors none of that? It's just, in my perspective, I don't think that is compelling enough. Now, let's be clear, right? I've been in this before. Before, when I started my investing career, we've all been in these kind of investment, these things that go sour. And what's more, even as look to the future, as I fully know that I'm going to make more blunders. And it sucks to make a blunder, and we all do it, and that's just part of the journey, because investing ultimately is a really humbling profession. And anyway, I hope you found this useful. Don't forget to check out my marketplace. It's called Deep Value Returns. I help you by providing you with high quality, actionable investment ideas. Hope to see you soon. Good luck for the earnings season. Thanks for listening. Bye-bye.